Vineeta, welcome to the show. I think traffic kept you away, but we were discussing Jindal Stainless. It's come down almost 20% from the recent highs. Any view on what should be? Do you have active coverage on Jindal Stainless? And you?
Yeah, we do have active coverage, Darshan, and we are positive on the company. And we have a price target for 95, and there is some 38% capacity expansion that the company is going through bottlenecking, debottlenecking of the plants. And also, if you look at the kind of margin expansion that the company is expecting, the company is giving a guidance of sales growth of around 15%. And EBITDA margin of 11.5 to 14.5%. So this Jindal Stainless has gone through, a lot of changes over the past from FY16, I would say, and that's the reason we are positive on the company. I mean, if I could explain.
Yeah, please.
So, like if you see over 10 to over year 2010 to 2016. The company had, there was a lot of sales through China, and after some plant shutdowns there, the company has moved up. Plus, they had some, demerger of the businesses and the cleaning of balance sheet. Some 5,500 crore of debt was, taken away from the company. So now the company is in a very comfortable position. The ROE is expected to move up by 4 to 5% over the next 2 years. So considering the volume growth as well as stable prices, we expect the company.
How are the valuations of the company?
Valuations are not pretty demanding, though. See, once the ROE moves up, the company will demand a higher valuation, because it has been over 2010 to 16. The kind of suppressed balance sheet it had. So it has a negative sentiment over the company. The company right now, as per our calculation, it is around 0.9 times price to book of FY20. And the ROE is expected to move upwards around 18 to in FY20. So I think 1.2 times price to book would be a good justification.
Okay, so that's the view that's coming in on Jindal Stainless. Let's move on to the next stop. The rupee actually has moved up significantly. It's depreciated. So we're asking our guest which is the best play that they should take now, considering how the rupee has panned out. So Vineeta, I'll start with you. If you want to bet on a company that's there that will benefit because of the rupee, which company would that be?
See, there are several companies in IT as well as some in pharma space, which have good exposure, global exposure. For my side, I would recommend Persistent to be one of the beneficiary in the rupee play. Also because the business of Persistent has changed over a period of time, and it is, I suppose, getting out of the woods. The digital revenue, which comprises of 21%, is expected to revive better coming forward. Also, the IP-led business is doing very well. Some of the acrylite business, which was around which is around 5%, and it was suffering some problems because of the past product, which was a lot of cost hangovers on this product. So the management has come out with new products. So I suppose Persistent should be a good bet if you want to play on the rupee.
Okay, what about you, Samir? IT?
So IT is the best way to play because there are no regulation issues anymore in this kind of a rupee depreciation era. For me, Infosys is the place to be, and we played that way when it was falling around 850, 800 levels. We've reduced the weights right now because the valuations has just shot up drastically because of the rupee movement as well. But if you want to play still the rupee, which we believe is a 75, 76 kind of area to be in, I think IT is the purest rupee relationship which you find, because pharma right now is another direct relationship, but they are facing regulation issues, so you have to be very specific in the stocks. So I think IT, if you pick up a TCS or an Infosys, is the best place to be.
Okay, and out of that, Infosys is a better bet for you?
Yeah, for me, because of the valuations are also cheaper.
It's run up also significantly.
Yeah, it has, in the relative terms, it has, but it's always done on a PE of 25 on a 5-year average. So right now it's around 19, 18. So I think there's still an upside. I'm not boosting about it, but the only point is that right now the results are also coming up in next couple of months. So I think if the rupee stabilizes somewhere, and the results will be shown as soon as the quarters come out.
Okay, so that's the view that's coming in on the rupee play. So persistent system as well as Infosys are the counters that's been spoken about. And the final stock that we want to talk about is a top sell call or a company that is overvalued, or a company that our experts feel will fall from these levels. So Sameer, which stock do you feel is overvalued, or if someone it's in the F&O, someone can want to take a shot on the counter?
So I think OMCs, right where we started. I'll go back to that sector, because over there the risk of falling from here is also higher as we see, because any upside crude shocks or any rupee shocks directly hit the OMCs. And now will be a tougher, because as the elections come closer, because your state elections are coming up, now it will be very difficult for them to pass on the prices. So these results will have an inventory adjustments which will affect the outlook towards it, and there will be certain downgrades which might come in. So I think that side is the place where capex, the rupee fall, everything is impacting on the negative side, and I can really see any upside.
Okay, what about you, Vineeta?
See, on the sell recommendation, we have TVS Motor on the radar, because there are 3-4 reasons I would mention. One is the EBITDA margin that the company had initially thinking of, increasing the EBITDA margin to 10% plus, and that has not happened in recent time, and even. So one is the EBITDA margin, where we are seeing some kind of not ramping up of the margin. Second, if you consider the scooter sales, the scooter sales, there has been a structural shift from 100 cc to 125 cc scooter, and where TVS was performing very well. Thirdly, Bajaj Auto, in last management commentary, he had was very, very positive and very aggressive in taking up the market share. The market share has fallen to 16%, and now they are, wanting to get it back to 24%. In the same 100cc segment for both the bikes, Bajaj prices are 19% lower than what TVS is selling in the 100cc segment. So, and 100cc segment again comprises more than 15% of TVS Motor. So there will be volume pressure on TVS going forward. Market share losing might be one of the case, because Bajaj getting very aggressive. EBITDA margin is a little difficult, keeping the commodity prices as well as the realization. Keeping both the things in mind, it will be a little difficult play for TVS Motor. Okay,
so TVS Motors as well as the oil marketing companies. Vineet, welcome to the show. I think traffic kept you this thing. We will discuss a few stocks. First of all, they have given their views. Jindal Stainless, I want to discuss. You all came out with a report, and you are rather bullish on the counter.
So very quickly, I think they are increasing capacity from 0.8 million ton to 1.1. So that's almost a 30% increase in capacity with only 40 crores of capex. So coming entirely through debottlenecking. So we'll see ROCs expand. Two is there's a possibility that anti-dumping duty could be implemented on SS. Either ways, they're doing pretty well. Their margins are very stable, around 16 to 17,000 per ton. So I think that is going to play out, and we are going to now witness them repay debt. So interest costs will come down over the next couple of years, and then the profitability will improve.
Okay.
So keeping these things in mind.
How are the valuations and financial performance?
So last 2 years has been encouraging. They're turning around. They have been positive, and valuation at 3.4 times FY21 is not very expensive. I think it's quite cheap. What the management is saying they will do in FY20, we are considering it in FY21.
Okay.
So to that extent, we are conservative, and they can shoot up. On the upside, risk remains to our model assumptions.
Okay, so that's it. We'll take one more stock because before we need to wrap up, the top sell call which these people gave, which according to you is an overvalued?
I think DMart is absolutely overvalued. A couple of reasons. I think 600 crore per store market cap is unwarranted. Second thing is that the operational efficiencies that they had vis-a-vis competition, now the competition is caught up. So in fact, on certain stores, Pantaloon is much cheaper for the consumer. So given this kind of scenario, I believe that DMart becomes a top sell idea.
Top sell idea. And very quickly, rupee play?
Rupee play, absolutely. Tata Elxsi, 90% exports. They have got maximum exposure to nouveau technology, 4G, 5G technologies. There's a pack of 30 which are going to hit the streets in the next 4 years. So they have got a good exposure there. They're well insulated from any kind of risk to their model, and there's a lot of operating leverage will start kicking in, and valuations are very reasonable.
Valuations are reasonable despite the run up. You're still bullish.
Yes, so they're FI 20 25 times, which compares very favorably with TCS.
Okay, so it was more like a rapid fire with Vineet. Traffic was the issue, nothing else, but two of our guests came in late because of traffic. But with that, it's a wrap on today's Hot Money. Vineeta, thank you so much for coming in. Vineet, thank you. Sabir, thank you so much for coming in. Ask BQ comes up next. Stay tuned to BloombergQuint.